Right now, millions of younger Americans are secretly banking on the exact same retirement plan, waiting for their parents to pass down enough money to finally wipe out their debts and secure their future. You see it in the financial headlines constantly. We are told an $84 trillion generational wealth transfer is coming. It is framed as an inevitable economic rescue mission that will fix the housing market and erase student loans for millennials and Gen Z. The problem is, that money doesn't actually exist in a giant vault, neatly waiting for a simple wire transfer to your bank account. This chart tracks that $84 trillion figure, but notice the red trend line representing long-term care costs. Because so much generational wealth is locked in home equity, it is uniquely vulnerable to being liquidated to cover medical expenses before reaching the next generation. This is why banking on a massive inheritance is a dangerous strategy. For many, the expectation of a windfall is being replaced by a much harder reality, a system where end-of-life expenses are increasingly positioned to claim family assets first. Let's look at the first major blind spot. Many families assume that because their parents own a paid-off home, a secure six-figure inheritance is practically guaranteed. That assumes aging is cheap. Today, a specialized memory care or assisted living facility averages around $9,500 a month. Standard Medicare does not cover long-term, round-the-clock physical or cognitive assistance. When the time comes, families are entirely on the hook to find private funding. The family home isn't passed down. It is liquidated into cash and funneled straight into a clinical elder care facility. A lifetime of hard-earned equity, built up over 40 years of working and saving, is entirely wiped out in less than 36 months. That life-changing inheritance you were counting on has already been spent. It is simply deferred payment, keeping your parents alive in a hyper-inflated healthcare system. People see these medical costs and think they have a clever workaround. They assume their parents can just legally gift them their savings or sign over the deed to the house right before they get sick. The federal government anticipated this exact strategy. They built a legal roadblock called the Medicaid spend-down trap. When applying for medical aid, the government slides the calendar back 5 years, flagging every financial transaction. If parents gifted cash or sold their house below market value, the state catches it, penalizing the family, blocking care, or legally reversing those transfers. You cannot legally inherit your parents' wealth if the government intercepts and seizes those assets to cover outstanding medical bills first. Even after the nursing home and the state take their cut, there is a third assumption. You'll at least get whatever leftover cash is sitting in the bank account. Past generations usually entered retirement completely debt-free, but today's aging population carries record levels of consumer debt into their golden years, holding balances on credit cards, massive auto loans, and home equity lines of credit. This graphic illustrates the reality of the probate process. When an estate enters probate, corporate creditors and collection agencies have legal first priority. They pile their claims onto the scale, completely outweighing any remaining assets. The math here is entirely unforgiving. If a parent's outstanding debts exceed the value of their remaining assets, the estate is officially declared insolvent. You cannot inherit a negative net worth. You don't have to pay their credit card bill out of your own pocket, but you watch the bank swallow up every last remaining dollar, leaving heirs with absolutely zero. The modern healthcare and legal systems are positioned to intercept family wealth before it ever moves between generations. Generational wealth is no longer a passive windfall you can just wait around to receive. You need to drop the phantom inheritance plan entirely. Psychologically, you have to operate with a strict zero inheritance expectation. Take control of your own balance sheet. Route every spare dollar of capital into aggressive, compounding vehicles like index funds or cash-flowing real estate to build wealth independently. Finally, sit down and have the difficult estate planning conversations with your parents right now. Discuss trusts and long-term care insurance before a medical crisis hits and forces a fire sale of their estate. True financial sovereignty requires taking back control today. Stop waiting for a broken playbook to deliver a bailout and become the ancestor who builds the generational wealth yourself.